OP Financial Group had a very good result in 2022 despite the uncertain business environment. Our earnings before tax were 1,265 million euros, improving by 12% compared to the last year. Total income, including the overlay approach, increased by 2% and total expenses decreased by 1% compared to the year ago. The loan portfolio and deposit both showed an annual growth rate approximately by 2%. Loan portfolio totaling to 99 billion euros and deposits totaling to 77 billion euros at the end of the year. All our three business segments performed very well last year. Especially earnings by retail banking segment were strong as their earnings before taxes increased by 65% to 502 million euros. In the insurance segment, claims volumes returned to their pre-pandemic level. Insurance earnings before taxes were 433 million euros and corporate banking segment earnings before taxes were 460 million euros. 2022, the impairment loss on receivables remained low. OP Financial Group's CET1 ratio remained very strong, reaching 17.4% at the end of December. This exceeds their minimum regulatory requirement by 5.5 percentage points. When we look at the year-on-year change of our P&L items, we see that our net interest income increased by 15% to over 1.6 billion euros. Net interest income increased in all our segments. Net insurance income grew by 20% to 889 million euros. The insurance segment's non-life insurance premium revenue increased by 3% and claims incurred by 13% to 1,012 million euros, excluding the increase in the discount rate. The increase in the discount rate for insurance liability improved net insurance income by 283 million euros. Net commissions and fees came down by 3% and totaled slightly over 1 billion euros. The investment environment was challenging due to the higher interest rates and lower stock prices, so the investment income, including the overlay approach, decreased to minus 5 million euros. Our operating income increased by 17% to 63 billion. The sale of the Pohjola Hospital in February increased other operating income. Moving on to the expenses side, the total expenses decreased by 1%. Personnel costs decreased by 2% and depreciations and impairment losses were 69 million lower than a year ago. However, the operating expenses increased by 8%. The increase came from the increased ICT and development costs and the increased charges of financial authorities. All in all, these P&L items resulted to 1,265 million euros earnings before tax for OP Financial Group in the year 2022. Impairment loss on receivables in the income statement decreased by 43 million to 115 million euros, and the ratio of impairment loss on receivables to loan and guarantee portfolio was 0.11%, lower than the past 2 years and coming closer to the pre-pandemic levels. OP Financial Group's CET1 ratio was very strong at 17.4%, which exceeds the minimum regulatory requirement by 5.5 percentage points. The CET capital of OP Financial Group as a credit institution was 12.6 billion euros, and it was improved by earnings performance and the issues of profit shares. The risk exposure amount totaled to 72.3 billion euros, which is 10% higher than a year end 2021. The floor based on standardized approach increased the total risk exposure amount in 2022. To conclude, our group's financial risk position is stable and good. OP Financial Group's funding and liquidity position is strong. OP Financial Group's buffer for the MREL was 9 billion euros and for the subordination requirement 1.9 billion euros. Our liquidity coverage ratio was 270% at the end of the reporting period, and net stable funding ratio was 128%. These ratios are on good level. To summarize, with our strong capital base and profitability, OP Financial Group had a very strong year in 2022. For this year, 2023, the earnings before tax are expected to be higher than last year.